Well, tensions between Russia and Ukraine continue to hold the key to global markets. Well, they have seen a bit of a tank yesterday, and what we did see is that the tensions continued to rise, continued to escalate, with President Biden acknowledging that Russia's continued presence along the Ukraine border continues to mar the global geopolitical climate. He also threatened extraordinary crippling sanctions against Russia in case of an annexation. So, of course, this has been a consequence of months of steady build up by Russia, and of course, this has now impacted markets. It's really the theme which has played out this week, and that's what's really driven markets into a whipsaw. And Dow actually fell 1.68%, clocking its worst day of this year. The S&P 500 was down over 2.1%, and the Nasdaq fell almost 2.9% in trade on Thursday, which is yesterday. Moving quickly on to Europe, well, the picture was pretty much the same, only in more tempered fashion. European markets retreated given the escalation. The DAX was down around 0.75%, the FTSE was down 1%, the CAC 40 is down 1/3%, and the Stock 600 was also down 0.75% in trade. Moving quickly on to how Asia has opened. Well, Asia had opened in carnage. In fact, when we looked at the Nikkei and the ASX 200 early this morning, both were down by over 1% each. But now that has tempered down. In fact, as we speak, the Nikkei is around 0.5% lower in early trade today, and that means that there is a slight recovery that the markets are witnessing at the moment. The ASX 200 too is down around 2/3% rather than over that 1% mark. The Kospi is down around 1/4%. The Hang Seng is down over 0.5% in trade as we speak. When we look at the SGX Nifty, that is also was down almost 1/5%, and now it's trading pretty much near the flat line, just with a slight negative bias. So not looking as bad as it was in early trade today. Moving quickly on to oil, well, that was a major focus point in terms of commodities, but oil is holding out very smartly above that $91 a barrel mark, obviously given the push due to the geopolitical environment. Gold, though, has breached the $1,900 an ounce mark, and that means that it's an excellent push for gold. Of course, as a commodity, it's a safe haven. So given the current environment in global geopolitics, of course, the push in gold was pretty much expected. The dollar index, though, has gained slightly, but is yet below that 96 mark. Bond yields have fallen on the back of this continued Russian activity, if I may term it, and the US 10-year bond yield is now at 1.962%. That's nearly a 4 basis point fall in bond yields in just a day. It was above that 2% mark, mind you. It's now down to just 1.962%. Crypto surprisingly has seen a steep fall, down over 8% in early trade today, and is just above that $40,000 mark. That's a roundup of how indices as well as markets globally as well as commodities are looking in early trade today.